So you're not gonna believe this. I was filming a video about Tesla and out of the blue, guess who calls? Speak of the devil, let's see. Oh yeah, guess who's calling us? Elon. Let's pick this up, hold on. Hello, Elon? Hey man, sorry about your Twitter account, yeah. No, I won't send you Bitcoin. What's that? You want me to send a message to the person watching this video? Yeah, I will, sure. I got a pen and paper, one sec. I was just telling people not to invest in Tesla right now. Hello, Elon? Hello? Where'd he go? Was it something that I said? Hi, welcome back. My name is Andre Jick, and that phone vanish at the beginning of the video was all done in camera. That was not trick photography, that was not video editing, because you're a real wizard, Harry. I'm a what? And speaking of electric memes, Tesla single-handedly has become the most popular and most valuable car company in the world. Lately, the stock price has been on a tear, and everyone's just a little confused as to why that is, except no one's more confused than Elon Musk himself. Wow. But speaking of Twitter, imagine this. You wake up one morning, coffee in one hand, phone in the other, you're feeling a little extra spicy, so you tweet, thinking of taking Tesla private at $420 a share. Funding secured. Enter. Now that tweet was single-handedly the most expensive tweet of all time. And that's because the Securities and Exchange Commission sued Elon for having a tweet that was misleading and was false and cost investors a ton of money. So 2 days later, after that lawsuit, Elon Musk stepped down as chairman and they prohibited him from running for chairman for another 3 years, and he won't be eligible again until 2021. On top of that, he and Tesla were both fined $20 million. Now the point is that Elon Musk is a genius, and with that personality trait is somewhat of a double-edged sword. Sort of like Kanye, who's now running for president. But did you know that Elon Musk wasn't even one of the original creators of Tesla, and he wasn't even the guy who named the company? That honor goes to the two original founders, Martin Eberhard and Marc Tarpening, who created the name in 2003. The birth of Tesla was decided on at the Blue Bayou in Disneyland. So the next time you're over there having overpriced dinner, you can be that guy. Hey, did you know that Tesla was created here? No. Well, now you know. Good talk. Now, Elon Musk, by the way, didn't actually join Tesla until 2004, and the reason that he became the face of Tesla, even though he was not one of the original founders, is because he was the OG in Series A funding to get Tesla up and running. He contributed $6.35 million of his own money and took a pretty substantial portion of Tesla for himself. Of course, eventually, through his leadership, his vision, his design, he was able to make Tesla be the most valuable car company in the world. Now, since then, obviously, Tesla has grown into a ginormous valuation where their cars continue to dominate the YouTube space. Seriously, every YouTuber in the world has a Tesla or a McLaren. I made a video about the McLaren, but I didn't buy that car because I'm way too frugal for that. But all of this to say is that I'm not a Tesla hater, and I think one should never underestimate Elon Musk. But regardless of how great the hype is, the question I want to answer is really simple. Is the stock valuation worth what it's trading at right now? Because I don't think it is. And let me tell you why. Now, they say a picture's worth 1,000 words. And the reason that I stay away from Tesla can be summed up with this one picture. Here it is. Yeah, that's never a good thing. In fact, you know what else looked like this before it lost most of its value? Bitcoin. This is called going parabolic, and whether that's real estate or any other asset class or the stock market, doesn't matter. Going parabolic usually means that we're about to hit the top or that we are at the very top, and it's never a good time to buy at the top. So here's a really simple way of looking at a stock to see whether it's a good time to buy it or not, and it's called the PE ratio. But I can already see people rolling their eyes like, PE ratio. What's a PE ratio? What it means is the amount of money that people are willing to pay for every single dollar of that company's profit. And you can find this PE ratio in all of your brokerages. So for example, if you have a company that has a PE ratio of 25, that means people are paying $25 for every single dollar of profit that company makes. And the higher the PE ratio means that people are expecting that company to make more money in the future, in contrast to a lower PE ratio where people usually think that company is not going to make make as much money. Therefore, because of the lower PE ratio, that's usually where we would find the value. Now, historically speaking, the stock market's average PE ratio has traded at around 15. That means for every $1 that a company makes, investors have typically paid a premium of $15 to be able to buy that stock. But try this. Go to your favorite brokerage, look at the PE ratio number, and multiply it by the EPS, the earnings per share, which you should also be able to see. And if you multiply those two numbers together, the result will be very close to what the stock price is. But most investors will look at the PE ratio and they'll look for something that's 20 or lower. It's a really quick and dirty way of narrowing down a lot of options when deciding what you want to buy. Kind of like when going shopping and you're going to the discount aisle when you're buying your, I don't know, Montclair X Pokemon t-shirts. That's a lie. Those things are like $300. They are never going on discount. Holla at your boy if you got the hookup though. So now that you know that the average PE ratio has historically been 15, let's compare Tesla's and see where it's at. Because Tesla's is obviously not 15, it's actually 36, I read that upside down. 368.15 out of a historic average of 15. But that's not even the best part. The best part is that the forward PE ratio, which is the expected future price to earnings ratio, is 485.35. That means people are expecting Tesla to be wildly popular and successful in the future and very, very profitable. It is pricing in all of the best case scenarios and people are paying buku bucks for the opportunity to be an investor. Now, I don't know about you, but I'm all in. And for that reason, I'm out. Now you laugh, but it's actually a metric I like to use when I feel this kind of FOMO, when I feel like I'm missing out on something and I should put all my money into a stock so I can double or triple my money, which as a human being, of course I feel like I've missed out on Tesla. But when I feel like that, I remind myself to get out or to stay out, especially if I've missed out. But hold on, Andre, don't be an idiot. PE ratios don't describe the entire picture because it leaves some things out. Facts. And that's because the PE ratio leaves out one of the most important variables of all, and that is growth. Because you might mistakenly be looking and buying stocks that are below 20 PE ratios thinking you're getting a great deal, when in reality, you're buying yourself a replica Audemars Piguet. Now, I bought this on purpose, but you could be fooled into thinking that you're buying something on discount because you're shopping only looking at PE ratios of 20 or below. And in reality, the reason that it's cheap is because the stock is dying and the company's not growing at all. So we have to be able to look at the growth and take that into account. And lucky us, there is a variable that looks at exactly that, and it's called the PEG. Now, the PEG stands for the price to earnings growth, and there's no doubt that Tesla has been expanding and growing like crazy, so it's definitely a very important number to look at. Now, the PEG looks at the PE ratio and it divides it by the growth. So you could do this manually, literally plug in the PE ratio and divide it by the yearly growth, or you can just Cliff Notes / Spark Notes it like you did in high school and just Google PEG ratio of stock XYZ and it'll tell you right away. But I at least wanted you to know the exact math behind it in case you wanted to do it manually and get some points for Gryffindor. Now, a good value PEG ratio is anything that is 1 or less than 1. The smaller number, the better. Anything above 1, the farther away you get from getting a good deal. Now, in Tesla's case, its PEG ratio is actually not a 1 or 2 or 3 or 4 or 5. It's actually a whopping 9.07. So if you're going to price shop for a stock using the PEG ratio, make sure you're comparing two stocks from the same sectors. In other words, don't compare Apple to something like Verizon. Instead, compare Apple to something like Microsoft and Verizon to something like AT&T. In the case of Tesla, if we take its PEG ratio of 9.07 and compare that to its nearest competitor, something like Ford, which has a 1.72 PEG ratio, so substantially cheaper. That's like shopping for shoes at Aldo versus Yves Saint Laurent. Both are shoes, but you're probably gonna get a better deal with the Aldos than the YSL. All right, so maybe it's not fair to compare Tesla to something like Ford, right? Let's use a bigger car company, something far more successful, Toyota. Toyota's PEG ratio is 2.95, so it's far more cheaper still. No, Andre, Tesla is a tech stock, so let's compare it to something like Apple. Apple's PEG ratio is 2.77, still cheaper. Let's compare it to Microsoft, which is more of a software company maybe, if you want to make that case that Tesla's more software just as much as hardware. And in that case, Microsoft's PEG is still 2.64, far cheaper. We can go on and on and on, but the point is, Tesla's expectations are up here and the reality is down here. Now, maybe a few years from now, I wouldn't be surprised if Tesla's extremely profitable, but the reality and expectations are still worlds apart. Now, I could bore you with financial statements or tell you that Tesla's finally posting profits, that they are expanding to China, building more gigafactories, introducing the semi-truck, the pickup truck, the Tesla Roadster, all of which have one thing in common: I cannot afford. But of course, all impressive, no doubt, one of the reasons why Tesla's stock is going to the moon. Let's take a broader look at the economy and a bigger picture of the stock market to understand exactly what's going on and what's probably about to happen. We're in extreme periods of volatility and some stocks are just going parabolic. And that's not just true of Tesla, even though I kind of picked on Tesla in this video. The same can be said for Apple, Netflix, Amazon, and so many other tech stocks. But the reality is going the complete opposite direction because some states are experiencing a second wave of shutdowns, more people are losing their jobs, unemployment benefits are being cut, forbearances are due, debt is due, renters are gonna lose their house, and Papa Powell and the Federal Reserve are printing so much money, they might as well own the entire stock market and declare its own IPO. An IPL. An iPowell. But it's not all bad news for us investors. Don't just take my word for it, check out what John Bogle has to say. This guy's a legend who's unfortunately no longer around, but he's the guy that created index funds and Vanguard, and also pay attention to not only what he says, but the fact that he's also like 665 years old at the time of the interview, and he is still incredibly sharp.
The fundamental return, the dividend yield, plus the earnings growth of companies, drives the long-term return of the stock market. The only thing that gets in the way in the short term is the speculative return. Are people going to pay more for stocks? Are people going to pay less for $1 of earnings in essence?
And that's pretty encouraging to know, that when the market falls, I'm still going to get my dividends, which I will reinvest back into the market. And when the market falls, maybe that's when it's a good time to consider buying a lot more of these tech stocks that have gone parabolic. Now, long term, Tesla's probably going to be extremely profitable as long as Elon is there to spearhead with his vision and his design. But therein lies the risk, because what if he wasn't the CEO? Would Tesla still be on top? But regardless of what the answer is, you have to weigh the pros and cons of having a CEO as visionary as someone like Steve Jobs or Elon Musk. But should you buy Tesla today? Well, I actually bought Tesla at $479.16 and I made 215% profit on all my money. Unfortunately, I bought 0.002 shares, so let's not talk about it. But if it was me today and I was focused on investing in growth stocks, I'd probably consider putting in no more than 10% into Tesla if I really wanted to invest in that company. So if I had $1,000 right now, I'd invest no more than $100, and I could do that via something called fractional shares. I don't actually have to own the entire $1,000+ stock. I could just put in $100 and see where it goes. But besides looking at just the PE ratio and the PEG ratio, try to look at it from every side, including the macroeconomic trends, because that's really important, especially because elections are coming up, which will undoubtedly, no, indubitably, have a negative effect on the entire stock market. But as usual, I try not to time the market, so I'm still putting in around $2,500 to $4,000 every single month back into the stock market, which for me is conservative right now. But if the market double dips like I expect it will in the near future, that's when I'm going all in and putting in those buku bucks. And in the meantime, if you've not already done so, sign up to Webull. Make sure to fund that account $100. You get a second free stock valued up to $1,400. Sign up to Robinhood for free. That's your third free stock. Follow me on Instagram. I post there from time to time. I also will leave a link to my Discord channel. It's free. We talk about everything from stock market to Yu-Gi-Oh to Pokemon and everything in between. And the other thing we're doing in Discord is once a week, I'm going to buy a stock and run a public stock portfolio, and you're gonna vote and decide exactly which stock it's gonna be. Love you. Thank you so much for watching. I will see you back here on Monday and Friday. And before I go, what's a pirate's favorite letter in the alphabet? You'd think it's R, but it's the C we love. That's stupid. I thought of the peg ratio, peg leg, made me think of pirates. I don't know, stupid. Bye-bye.